Now we go to question third. First we read the question. Mr. A and B were partners sharing profits losses in the ratio of 3:1. Mr. C and D were partners sharing profits losses equally. Following are the balance sheets as on 31st March 2020. Asset sets, plant machinery, furniture, stock, debtors, fixture, cash in hand. On liability sides, creditors, bills payable, Mrs. B's loan, Mrs. D's loan, outstanding rent, and capitals. Now we read the adjustment. First adjustment, Mr. B agreed to pay Mrs. B's loan and Mr. D agreed to pay Mrs. D's loan. Here, Mrs. B's loan rupees 10,000, Mr. D's loan rupees 7,000. It will be directly transferred to partners capital account credit shares. Here we write a partners capital account credit shares. Capital credit shares. Now second adjustment. Outstanding rent was paid in full by the respective firms. Here outstanding rent rupees 2,000 and 1,500 is paid out of the cash. It means cash will be deducted or cash will be minus. We have to deduct the cash rupees 2,000 and here rupees 1,500. We have to subtract cash and it directly affected in the new firm account. Now next one. Creditors of both firms were taken by the new firm at a discount of 5%. Here creditors will be 5% reserved for discount. We have to subtract creditors. Next is plant machinery is subject to 5% depreciation of both firm. We have to take out the plant machinery and 5% deduct one. Next is furniture of CD was sold in the market for rupees 8,000. Now see, furniture of CD rupees 9,000. It's sold for rupees 1,000. It means 1,000 is subtracted or less from furniture. And furniture sold in the market for rupees 8,000. It means its cash will be added. Here cash will be to add one rupees 8,000 in the new firm. Now second, furniture of Mrs. AB was not taken over by the new firm. Furniture of AB not taken is the direct capital account debit sides in the profit sharing ratio or it may be distributed in the capital ratio. Here also fixture was not taken by the new firm. This one also disclosed in capital account debit sides in capital ratio. Next one, stock of Mrs. AB was valued rupees 22,100. Here stock of AB rupees 20. It means we have to plus 1 2,100. And CD was valued at rupees 21,000. CD stock rupees 24. It valued rupees 21. It means have to subtract rupees 3,000. Okay, prepare ledger account in the books of both firm and balance sheet of new firm. Now we go to answer sheet. Answer sheet is like this one. A part in the books of Messrs. AB, revaluation account, partners capital account and a new firm account. First we try to complete the revaluation account. Now we have to see asset decrease are recorded on debit side, asset increase are recorded on credit side. We write plant machinery decrease by 5%. We write it on debit side to plant machinery. %5 on 20 rupees 1,000. Next is stock increase. We write it on credit sides by stock rupees 2,100. 2,100 increase. Next is nothing one on liability sides. Creditors decrease is on credit side by reserve for discount. On creditors, it's a 5% on rupees 10,000. It comes 500 rupees. Okay. Nothing else. We go to close the revaluation account. Total of credit sides 2,601. We write it on a debit side 2600. From this one we have to subtract 1000. Answer comes to be 1600. This is the revaluation profit transfer to partners capital account. To partners capital account. Partners A and partners B. Profit sharing ratio is a 3:1. We divide in this one ratio 3:1. Here 400, here 1200. Its profit transfer to partners account credit sides. We try to complete the partners capital account. First we have to write partners capital A capital 30, B's capital 20 on credit side as a buy balance brought down. Rupees 30,000 and 20,000. Next is B's loan transfer to partners account credit side by Mrs. B's loan. In a B's column, rupees 10,000. Profit is transferred to credit sides by revaluation account, rupees 1200, and here it is 400. Okay, now we have to see in adjustments. Furniture to be distributed in partners account debit side to furniture, rupees 12,000 distributed in a capital ratio 3:2. It comes 4,800 and 7,200. Next also we have to distribute fixture also. To fixture, ratio is same 3:2, rupees 1600, 640, and difference is 960 is a fixture. Okay, nothing else. Now we go to close the partners capital account. Total 3100, 201, and here 400. Write it on debit sides. 31,200 and 30,400. From this one we have to subtract these figures and answer come 24,960. Here 23,040 is a closing capital transfer to new firm account. It will appear on new firm account credit sides. Now we try to complete the new firm account. All revised assets on debit side, all revised liability on credit sides. Now see one by one. Plant machinery revised value less 5%. It comes to 19,000. We write here it is to plant machinery. Rupees 19,000. Next is to stock 20 plus 2, 22,100. Next is to debtors rupees 19,000. Next is cash in hand. We may calculate here it is 3,400 minus 2,000. It's outstanding rent paid. It comes 1,400. Okay, now on liability sides, by creditors here rupees 10,000. Reserve for discount we'll write on debit sides. Reserve for discount on creditors. It's a 5% on 10,000. It's 500. Next is bills payable, liability side. Rupees 4,000. Capital transfer, outstanding rent paid. Now we have to write closing capital. By A's capital, rupees 23,040. by B's capital rupees 24,960. Okay, now we go to close the new firm account and total comes rupees 62,000. 62,000 is a total. This is the first part. Now we go to second part. B part is like this one. In the books of Mrs. CD firm, a revaluation account, partners capital account, and a new firm account. First, we try to complete the revaluation account. Asset decrease on debit sides and asset increase on credit side. We see one by one. Here, plant and machinery of both firm decrease by 5%. We write it on debit side to plant and machinery. %, on 27 it comes 1,350. Next is furniture, decrease by 1,000. Right here it is to furniture, rupees 1,000. Next is stock decrease. We write it on debit side to stock, rupees 3,000. Okay, nothing. Now on credit sides, live sides, creditors, we write it on credit sides by reserve for discount creditors. %, on a 15,000, it comes 750. Now see, okay, now we go to close the revaluation account. Total rupees 5,350. We write on credit sides 5,350. From this one we have to subtract 750. Rupees 4,600 is the loss. It is revaluation loss transferred to partners capital by partners capital account. Partners name is C and D. Ratio is equal. We have to divide 2,300 and 2,300. It will be transferred to partners capital on debit side. Now we write partners capital. Capital C and D 25 by balance brought down, rupees 25,000 and 25,000. Now see, Mrs. D's loan transferred to partners on credit sides. We write here it is by Mrs. D's loan. Rupees 7,000. Okay. Now, furniture is a sold. Fixture is to be on debit sides to fixture. Rupees 1,200 in equal ratio. Partners capital ratio is equal. Rupees 600. Now, we have to transfer revaluation loss on partners account debit side just to revaluation account, rupees 2,300 and here 2,300. Now we go to close the partners capital accounts. Total of credit sides rupees 25,000, here 32,000. We write it on debit sides 25,000 and 32,000. From this one we have to subtract above figures and answer comes rupees 2,200 here, $2,900 is a closing capital. It is transferred to new firm account. It will appear on new firm account credit sides. Now we try to close the new firm account. Here all revised assets on credit side, all revised liability. Now plant and machinery we write on debit side to plant and machinery rupees 27 minus 1350. Here deduction, we subtract figures, answer comes 25,650. Furniture is sold in the market, it will not appear in the new form account. Next is stock, we write here it is to stock rupees 24 minus 3 is come 21,000. Next is to debtors, same as it is 17,000. Next fixture is distributed here already. Now cash, we write here it is cash and bank balance. Original cash balance rupees 3,300. We have to plus 8,000 and minus 1,500, 9,800. Now on credit sides, by creditors rupees 15,000. Reserve for discount will appear on debit sides to reserve for discount. On creditors 5% on 15, it comes 750. Next is bills payable. Rupees 8,000. Okay. Now we have to transfer partners capital. By C's capital rupees 2,200 and by D's capital rupees 2,900. Okay, now we go to close the new firm account and total comes rupees 74,200. On credit side, so 74,200 is total. This is a B part complete one. Now we go to third part, C part. C part is like this one. Balance sheet of new firm. As on 1st April 2020, liabilities rupees base, asset rupees base. First we try to complete the asset side. Here we have to write both companies' assets. Now first is a plant and machinery. We write first line, plant and machinery. From AB, rupees 5% less, 19,000. And from CD, 25,650. Now we make totals 44,650. Next is stock. Furniture is transferred to partners capital and here CD firm is furniture sold out. Therefore, it will not appear in the balance sheet. Now we write stock of AB firm rupees 2,000 plus 2,200 and CD firm 3,000 minus it comes 21,000. We make the totals 4,300. Next is debtors. AB firm 19,000, there is no change. CD firm 17,000 and totals 36,000. Next is fixture transfer. No cash in hand. Cash in hand, AB firm and CD firm. Here cash in hand 3,400 minus 2,000, it's a 1,400. And here we have to see in the last one accounts, cash 9,800. We write here it is 9,800. Now we make the totals 11,200. Okay, now we write on liability sides. First we write the capitals. Partners name A, B, C and D. We have to write the capital on last ledger accounts. A's capital 23 1040 and B's capital 24,960. Now C's capital 2200 and D's capital 2900. Now we have to see next creditors. We write here it is creditors. AB firm 10,000, CD firm 15,000, total is 25,000. We have to subtract reserve for discount 5%. %5 comes 1,250. Deductions comes 23,750. Next is bills payable. Rupees AB firm 4,000 and CD firm rupees 8,000. Totals 12,000. Now see, loan transfer to partners capital, outstanding rent paid out. Okay. Now we go to close the balance sheet. $1,34,950. Write it on live sides. 1,34,950 is a total. This is the complete answers. Now we go to close the answer sheet. Okay, thank you.